what's happening now, it seems to me like all these like verticals trying to apply LLM to like a problem that is fairly small in a sense is similar. Like we try to apply the SaaS model to problems that are fairly small, right? But we don't have any of the money switching between like CapEx and or this. Like there's no different business model. It's just a different feature.
Mm-hmm.
And there is like the game is known. There is no more defensibility. All right, so we're finally doing the AI podcast that we talked about for a while. I think maybe like just to set the scene, we could understand what's happening in the AI startup investment right now. How are things evolving? And I know you follow a lot of the literature, what's written about this and the data. What's happening?
Yeah, I think probably everybody exposed to this at all knows by now that it's accelerated rapidly in the last couple of years, basically since the launch of ChatGPT. But actually, it's kind of funny. It goes back. It's a field that's existed for a few decades. VC investment in AI has been happening for a long time, but then you had like this LLM explosion with ChatGPT and just a tremendous amount of money being invested in this type of AI. I've got a few charts we could look at quickly just to help illustrate that trend. Okay, can you see that?
Yeah.
All right, perfect. So this is up until January 26th, 2023. I think that's a mistake on PitchBook's part. It should be January 2024. But it's just really to show like up until the beginning of this year, that tremendous acceleration, the number of deal count, the number of deals and the amount of capital is kind of crazy. It's reminiscent of like the dot-com boom, for example. And then there's the Stanford AI Index report, shows a similar thing. You can see, obviously, investment was going into AI before ChatGPT, before this moment, but at a much lower rate. Yeah, this goes back a bit further to 2013. Like this chart particularly is showing the investment by region. And like what's most interesting to me is it was the US more than anyone else that in 2023 exploded. And again, it's related to OpenAI, XAI, Cohere, Anthropic.
Grok.
They're all based over there.
Perplexity. Yeah.
Yeah, absolutely. All the giants. Though, like particularly those like LLM infrastructure or LLM model companies, the ones that are absorbing all of the money to build the data centers, to do the processing, buy the NVIDIA chips and so on. They're pretty much all based in the US. I mean, of course, there's a lot in China too, but the ones in China, I guess, are getting funding from different sources.
They're not in the charts. They don't make it into the PitchBook data.
Yeah. And yeah, again, slightly different perspective. So rather than geographic area, this is looking at sector. So there's lots of shifts, and generally you see, strangely, you see a lot of sectors falling a little bit, 2022 to 2023, except for the AI infrastructure, which exploded. Like between those 2 years, it's night and day. It went from one of the smallest sectors to by far the largest in 1 year, which is
and I think we saw a little bit of contraction of the hype, or at least people starting to ask questions, maybe in like Q2, Q3 before GPT-01, and then
of
like
this
after
year.
that, of this year, right?
Yeah.
And then after that, we went back basically and forgot about those questions, and we're again on the full speed ahead, it seems.
Yeah, absolutely. There was already evidence as of the first quarter of this year, as you were saying, of kind of like a fall, bit of a drop in the level of interest. That does seem to have reversed a little bit in more recent data. So, I wouldn't read too much into that. But
indeed,
certainly the like exuberance of last year, I'm not sure we'll see it return to that level, but maybe.
Yeah, and we know that 95% of Y Combinator cohorts are doing AI, or at least they're claiming, but it's likely that like at least 80% is actually doing. Like the whole funding world or at least whatever makes the news is revolving around AI, right? So maybe the first topic is, is that a good thing? and why is it happening, right?
Yeah, I think it's also important to draw a line between, and this is where a lot of the data fails, like LLM infrastructure, the big companies making the models, the ones that are absorbing the crazy amounts of capital, and then all of the other much smaller startups who are using those models to do stuff. And
Yeah.
some of those are quite big as well, but like it's kind of a different game, really.
Yeah. For me, there is a parallel in how things are behaving, but then a big difference in the fundamentals of things when you look at the SaaS wave, right? So the
Hmm.
SaaS wave, you had like low valuations, capital that was like accumulating and was starting to get into all these companies, and then like a ton of them, right? And I'm talking here about the application layer, not really the, like, let's say that the LLM have enabled like a new type of business model or a new type of thing, right? Kind of like SaaS did, right? And then SaaS saw all that growth. But so it looks like that's the trajectory. Everybody's after that. But the differences for me are huge. Like the SaaS was replacing like a cost center for companies that had to have infrastructure in prem and everything, and it was ending up in capex, and they didn't want it in capex. So all that really helped a ton of revenue for SaaS companies. Plus the fact that revenue is recurring. Nobody really understood that at the beginning. What type of risk that does that create, right? And these companies were created when software was a lot more expensive. So you had to raise like 5 million at the beginning, 5 million to actually bring the innovation to market in a reasonably decent way.
Hmm.
What's happening now, it seems to me like all these like verticals trying to apply LLM to like a problem that is fairly small in a sense is similar. Like we try to apply the SaaS model to problems that are fairly small, right? But we don't have any of the money switching between like capex and or this. Like there's no different business model. It's just a different feature,
Hmm.
and there is like the game is known. There is no more defensibility. Like if you make a software that is fairly easy to build, especially now with AI, like 2 months later you're going to have like 5 competitors, right? And God knows about this waves of developer tools, right? So this week is Cursor, next week is I forgot how the new one is called, Windsurf or something like that. And that for me is really easy to do. Like these companies and these investors, I feel they are being attracted by the end game, the AGI, the big payoff, but then we are not considering moats and like uh, how to defend those markets. And we still have this paradigm of winner takes all. But if the software can be rebuilt in a week, or like at least the core feature that gets you popular can be rebuilt maybe in a better way in like even in months, is not a sustainable competitive advantage. So yeah, I have my doubts, and I know you have yours on this type of
Well,
companies.
you mentioned AGI, and like I think this may be something I've mentioned to you in the past, but like it's always been funny to me since the beginning of this wave. First of all, like AGI appeared as a term, I think, to try and help people understand like the difference between AI and AGI, and then there's like ASI, which like Sam Altman is now referring to, and it's all like it feels a lot like moving goalposts because go back a couple of years and like they were talking about like general AI is coming soon. It's within a few years
Yeah.
rather than a few decades, that kind of thing. But if you go back to 2014-15, when I was at Data Economy and we were working with like companies doing neural network type stuff, like precursors to large language model type things, nobody called that stuff AI. Like you would have been kind of laughed at a little bit if you did, because it was machine learning, it was neural networks, it was uh, possibly small language models or medium language models, but like nobody called it AI. AI was this thing where like machines learn to reason and think like humans, and that's it.
Yeah.
Like that the sci-fi concept. There was kind of a a purist way of thinking about that. But today we have so much confusion about what it means, so many different definitions, and it feels like, because like that's the North Star that they're using to try and like bait people's enthusiasm.
Yeah, no, I mean, I agree, but I don't know. For me, like, I am very very optimistic about these things. The power that even like ChatGPT 4.0 has today, and the other models as well, to perform tasks, and the way that we use it in our work even today, for multiple things, checking text and improve text for interfaces, make better follow-ups. So that's already like replacing some people. And I know like the copywriting was kind of the first thing that it did. But in terms of the terminology, like to me, it really feels like the difference between painting and photography, right? So, or like let's say digital cameras versus analog cameras, right? At some point, like digital cameras were getting better and better, and like I'm sure there wasn't maybe a name for it, but somebody had a name for like when digital is going to be better than analog, right? But then nobody noticed specifically the day when that happened, right? But then in like 2 years, digital cameras had 80% market share, and like it reversed in 2 years, right? So I don't know. To me, like, yeah, the specific terminology doesn't really matter. It's more like what can you do with it, and what are the implications for people, for companies, for investors, for everybody. So current AI is already fairly general, in my opinion. It doesn't have arms, so it can only manipulate digital stuff, but it can read and understand and more or less operate on any website, right? Being it like a doctor website or a construction booking platform, like anything, right? It can understand what it is. It can tell you things about it. It can operate it, maybe like a little bit still janky on that, but it's happening. So in my opinion, it's fairly general. Again, yeah. What does it allow to do?
Yeah, then like the question is like, okay, that you could qualify that as general intelligence. Like, is it AI as we used to know AI? And like, maybe that's not a very helpful definition, but if you think about valuation, for example, and like how valuation is essentially looking into the future and the potential of companies to try and understand their worth. So you've got to think about, like, if you're fundraising for OpenAI or Anthropic or whoever, what does their business model look 10 years out? And they're telling us we're going to have like true AI, and that's what they're building their story on.
Yeah.
Is it actually realistic? Can you actually do that with LLMs? Or does it need fundamentally different architecture? Which is what I think, Ilya, who left OpenAI, I think that's his belief, which is why he's departed. And if that's the case, then there's a huge amount of more risk in OpenAI's story, because now they don't have the architecture to do what they're kind of hinting that they were getting towards.
Yeah. No, and that's everyone's bet, right? But I don't know. Like for me, the opportunity there is that even if you don't get there, right, with whatever we have today, and maybe like the next 6 months, like refine the tools that they can use, websites, they can use things. You have like the knowledge worker tractor. You go from like the bull carrying the thing to a tractor, right? You can increase your productivity by a lot if one single company does it, and it adds, I don't know, 100 trillion of productivity. Then how much is that company worth, right? And so that's, I think, a thesis that I support personally, but I don't support the fact that it's going to be one single company doing that. And it looks like everybody is betting on the fact that it's going to be one single company. To me, because of how quote unquote easy these things are, and we need to thank the open source community for that. We need to thank open research community, like all those kind of things. With how easy quote unquote they are, and how easy quote unquote software is becoming, I don't see how one company is going to dominate, and we're not going to have a 100 gazillion little companies, which is, in my opinion, a lot better for everybody. If one dominates, is because it gets to this ethereal AGI, or whatever they call it, super intelligence, and it can evolve so like at such a pace that the other ones cannot even compete.
Mm-hmm.
And of course, sounds a bit doomsday, but maybe
Yeah,
not.
at that point, we have bigger worries than a monopoly, probably.
Exactly. Yeah, indeed. And investor returns and stuff like that's secondary at that point. But I do see, like, the best case scenario, maybe the optimist scenario is like, this is a tractor for knowledge workers. We are getting, and then we get into sort of macroeconomic theory or like capitalism itself, but we hopefully get to a place where resources are take even less time and work and things, right? And then all of us can maybe work less or degrow or things like that, because so much is done by, other systems.
Yeah, I mean that's a good question. That was one of the notes I have written down to discuss. Was like, if you imagine that AI, or generative AI, whatever you want to call it, if it makes everything, like, take the movie industry with like Ben Affleck's talk that was released earlier today, with the video that's gone around, been fairly popular. He talks about how it will provide tools that will shave off a lot of time in many of the processes and components of building a movie. But if it does that, cuts down the time involved, and then the outcome of that is it reduces costs. The end result is you have fewer dollars being circulated. So like, maybe then you could say those dollars can go into producing more movies and more content, but like, there's a ceiling to that, and like, does that mean, like, is that overall better? I don't know. And then that, like,
Yeah.
there's a degree to which like people need to be in work, so people need work to do. And if you start cutting out loads of work, like, this is kind of where you get into the political side of it.
Yeah.
And yeah,
Yeah,
it
I
gets
think
very
it's
messy.
interesting though. It gets messy, but it's very interesting. So the Ben Affleck thing, like, one thing that I read into it, he was saying like, yeah, AI is going to simplify things so that instead of making one season per year, you can do 2 seasons, right? For me, that equation is like, instead of making one season per year, you're going to make 2,000 seasons, right? That's the difference between the analog camera and the digital camera, right? Like, you could make 20 pictures, you had to bring them to being developed by somebody, and then you would have them printed, and of course you have limited physical space, right?
Mm-hmm.
Whereas now, at some point I wanted to check, like, how many pictures have been taken of the pyramids, like how many trillion of pictures of the same exact thing, probably all slightly worse than like whatever best picture
Yeah.
has won the National Geographic Award, right? So that best picture is going to still be one, right? But there's going to be like 20 trillion pictures. The same, I think, is going to happen with movies and things like that. And when you bring down the cost of making a movie to like so much, what can you do with that format, right? You can do personalized movies that make every single person feel like they're the protagonist, right? No matter their gender, no matter their, like, a specialized movie for each person, or language, obviously, like their understanding of the word. I don't know, right? So like that's what I'm saying. Like this, even with current or like forecastable evolution of the current tools, the changes for me can be incredible in a lot of places.
Yeah. I mean, we could diverge there into a whole rabbit hole about like creativity and AI and what AI is really capable of doing. Like, I'm definitely more of a skeptic than you are on that. Like, I definitely take Affleck's side that humans will always be involved, and specifically that the very best products of those fields, whether it's like movies or TV shows or books, are going to be like a visionary person at the top directing
Yeah,
everything that happens below.
for sure. Like that I do believe as well. And that, because the generation is so much, it might be that those ones, like, they rise so much to the top, like, actors or so, like, these days are, one could argue, a lot more famous than, because we have a globalized market, because we have, the really the iconic people are very few, and they are the same ones for the whole world.
Mm-hmm.
It could be like that also for a specific creator in a specific field, right? Because everybody else, like, the specific talent is going to rise to the top. So I do agree with that. Or it could be, that we get into so many specific niches, and we generate these smaller hierarchies, and then everything is a bit more better distributed. That's also a pretty okay option. But for me, like, the argument that people have on the work side is, so we're looking at it from the point of view that everybody needs to work and like we need to find work for everybody, rather than, you know, the more basic version of that is everybody needs to survive and have what they want, in a sense, right? So what they need and what they want, and we can talk about where the line is. But as more and more of the less and less basic needs are satisfied, right, because things get cheaper, then, you know, we can work less and less, in a sense. We don't need all to work, or if we work, we can work in a sense of like doing some research and things like that. This is not possible if a single company captures the whole value, and the only people that are allowed not to work are the shareholders and people that were part of the capital of that company. So the idea of like a universal basic income, or like technology productivity based tax, which of course has different prisoner dilemma problem. Nobody's going to do it first, but like these type of things to redistribute the gains from these things, I think would be, again, the most optimistic. This is the most optimistic scenario that in my mind can happen. I don't know how realistic it is. That's for sure.
But in the near term, let's say, like, I don't think it's today. I don't think it's going to be even within the next 2 or 3 years. But you have a ton of new vertical AI solutions that are available in, you know, pretty much any industry you can think of, and they displace old SaaS solutions. And probably they do it initially by like lowering costs to get people on, but then ultimately probably the costs are going to rise to broadly what they were replacing to eat up all those budgets. And then you just have like it's almost like a no change, really. Like I think SaaS represented a bigger change in the realities of the businesses and the economics of the businesses than AI will in the next 5 maybe to 10 years.
Yeah, it could be. It's interesting. Yeah, I think at the level of costs and prices, I wouldn't assume that the new tools are gonna cost the same, are gonna like replace and get into those budgets and stuff. For example, I was already seeing like some developers making their own Notion, just not to pay 10 euros a month for Notion, or however much it is. You know, some simple things you can make yourself, and because it's so much simpler with AI. Host them yourself and save money in that way. Will it be bigger than SaaS? That's a good question. And how much of those gains can you capture? Because already SaaS, in my opinion, managed to capture some gains because pricing got anchored at the wrong levels. You know, like a lot of these tools that are like 10 euros, 15 euros, and it's a little bit the same right now for Substacks. You know, so some Substacks, like no matter how good it is, like the value that you get from one single Substack for like $10 per month compared to a subscription to I don't know, the Wall Street Journal or your media outlet of choice, like is incredible, right? The difference in pricing, and it's almost, in my opinion, all anchoring. Like there is no specific reason, right? Of course, nobody is becoming a trillionaire on Substack, so you know it's not like it probably has some fundamental mathematics underneath it to just sustain the single writer. But yeah, the price anchoring is huge, and in SaaS, I think it was also huge. The first company started with like this 10, 15 euros a month, but then certain things should be more expensive, like Spotify. Spotify hasn't managed to make a dime in the past 10 years. Because like the cost of what they're selling is higher, right? Other websites still pricing at 10 euros per month or something like that, are making huge margins because what they sell is a lot cheaper. So I don't know. I think there is a lot of mispricing in the world and a lot of anchoring of stuff.
It's interesting to think about in a world where you can, you know, build your own Notion, and suddenly like there are like competitive moats are almost non-existent for products. Potentially it becomes a much more like service driven thing where almost all the value that is offered by those companies is now in what they actually provide to the user on an ongoing basis as like a service, whether it's updates or support or additional features, whatever it may be. And even then, like prices will probably have to come down as well. Those companies providing those services will also like have to use AI to find efficiencies to live with lower prices. So yeah, that's an interesting one. I hadn't thought about that.
Yeah. Yeah, and then the next kind of question is, what are the moats, right? Because then like software, like the cost of software development going through like making a very complicated product that takes a long time to make is not there anymore, right? So assets, right, data, networks, like
Mm-hmm.
moats like that are still very interesting. And I think one thing that a lot of new startups are not thinking about is distribution. Because like if you manage to lock in the distribution and to be the first in the mind of your customers for a specific reason, like for example Perplexity with that brand of AI search,
Mm-hmm.
that's a fairly good moat. But like the competitive advantage that distribution, the power that distribution is going to have versus production is shifting, right? A few, like 20 years ago, it was all about, can you make the website at all, right? And if you make it, then people will find it because you're the only one that was able to make a website about eBay, right?
Mm-hmm.
And now it's the opposite. There are a billion eBays, but there is only one Mr. Beast, right? That has the distribution to get to the audience. So yeah, it's a big difference.
Yeah, that reminds me of quite a few people, even going back a couple of years now, have been talking about AI as an incumbent strategy because Adobe, Microsoft, Salesforce, those kind of companies, they have the data and they have the distribution. So for them, it's a huge value add that's relatively easy. They have everything they need to train the models, and they have everything they need to put it in the hands of the consumer. Whereas for any startup, like you don't necessarily have either of those things. Like you can use like an open source model or whatever, but like it has limitations in terms of
Yeah,
specialization. So
yeah,
that kind of adds into this argument of like whether or not AI, going back to thinking about it as like a investment trend, is it just driving money into the arms of incumbents? Thinking then of like obviously Nvidia as well has made a insane amount of money selling the
yeah,
chips that power all of this.
yeah, yeah. It does feel a little bit like those like gold rush moments where the only people making money are the people selling the pickaxes,
Yeah.
at least for now. And I do think also, and we were talking today about Apple Intelligence, and it seems so far that incumbent AI, yeah, it's been made, but it's not very useful. Right? It might even be sold to customers, but like nobody's being really happy about it. Even like
The
Copilot.
Adobe tool is quite nice. Adobe Firefly, like I use that every now and then. Like it's nice that it's integrated into the software directly. You know,
Yeah,
it's my only real experience with it as a like incumbent
yeah.
tool.
Yeah, no, but it's true. They do hold the cards when it comes to advantages, but I don't know if they're playing them very well for now.
Mm,
But
yeah.
again, if somebody figures it out, right? If a startup figures out how to make a better Apple Intelligence or whatever it may be, and then the incumbent can copy that strategy because again, copying things is easier, coding new things is easier compared to the past, and they do hold the actual modes, so the data and the distribution. How can that startup make it?
Hmm.
It's a very good question. And I mean, even like a lot of these applications to sales, right? Sales and customer support and things like that. You can easily see like Salesforce or Intercom having a wealth of data that a CRM startup cannot really have. So even if they come up with a better UX or like that key to customer adoption that right now seems to be a bit elusive, like Salesforce can copy that, right? So
Hmm.
yeah, it's a good point. It's a good point, and that's to be honest, it does like I'm really puzzled about like all this investment in AI software because like for me right now the moats are in hardware, and we
Yes.
are and we're talking a lot about Europe and how behind it is in AI software, and I fully agree, and that's a shame. And if it wasn't pretty, we would really be screwed because at least it's pretty. We get tourism, right? But um, If it wasn't pretty, then. But aside from that, so like that's extremely true. But I think what we are underestimating, or at least what we are playing with the wrong strategy on, is like we're very good in hardware, like Europe as a whole, right? Patents, research, even pharma, as long as it doesn't require too much money, because when it does, then it moves to the US. But
That's kind of a
engineering
limit for
talent,
hardware too.
it is, yeah, it is. But like the research, the core research is very, very good. So, if we wanted to play, like those things have a moat, right? You make a patent for like 20 years, you have a moat. You also have moats of just building an ecosystem that works, that is at the cutting edge of a specific field. And you see it here in the Netherlands with semiconductors, but aerospace a little bit as well, of course, SpaceX type of things now. So there are things that I think we can play, and I don't understand why all this money is going into AI software applications. Not, I understand the GPUs, I understand that part, like is easy, is infrastructure investments. If you think that generative AI is gonna be used, then you can invest in GPUs. You have 10% return per year, fine. But as a startup investment, investing in these second layer applications that solve a niche, which are, in my opinion, fairly easy to outcompete afterwards, and they don't have very serious moat. Ignoring how AI can accelerate hardware, molecular research, that's moving a little bit more, but it's very strange. If you
Yeah.
see the Y Combinator cohort, it's all software still.
Yeah, I think a little bit of that is kind of reflected in, you go back and look at the rise of software, and it took venture capital a while to understand software and the risks of software. And then I think if you apply that to AI, like the software, like OpenAI is basically a SaaS company, kind of. Like it's very easy for VCs to understand compared to the hardware side. For example, there's like Etched in the US, who is building a new type of a new kind of platform, new architecture for compute. I think it's like some kind of optical compute instead of transistors. They've done very well, like marketing wise. They're quite a big name. They got a big fund on board and like got loads of attention. I know of at least 3 other companies doing something very similar, 2 of which are based in the UK, but they're just like 2 PhDs working on it at like the Imperial College London incubator or something. Like, and like nobody's looking at them. Nobody understands it. Nobody seems to care. They don't even seem to understand that they need to put themselves out there in the same way. Like it's just such an eccentric world. Like this idea of like new hardware for compute, and like VCs have to try and understand it, and they need so much education.
Yeah, and I think that their mandate as well, right? They raised the capital in 2021 or 2022, where software was at the peak, and that's what they promised, like to invest to their own investors, like you're gonna get into the software trend and stuff. And now AI is fairly trending, at least in public opinion. So then the logical thing for them is to invest in a bunch of AI verticals and AI startups. But yeah, I do believe like the opportunities are in software, in medical, in hardware. Sorry, not in software, in hardware, in medical, in things that can build a moat. It's it's very strange. And yeah, the the 2 PhDs in Imperial College London, that to bring a product to market will need hundreds of millions, right? Because it's a hardware product. They're gonna have a hard time, or they're gonna go to the US.
They're going to move. Yeah, I strongly suspect they'll end up moving. It's a funny contrast, though. Like, I think it's almost like if you look at the dot-com boom, you had this, like, roughly speaking, it was a 4-year period where, like, the hype was the greatest. Or like, from the beginning of the ramp-up, let's say, like, 90, 94, 95, maybe 96, where a lot of very good investments were made. And then you had 97 through to 2000, where the heat was a lot greater. There was much more hype. Prices were inflated. And most of those ended up working out very badly for investors. But essentially that was because you had, as you expect with like power law, you had a huge number of companies that got investment, and they all concentrated down into a few winners, as you expect. Like that's totally normal. It's almost like with AI, it's the reverse, because they bet early on a few winners and they've concentrated an insane amount of money into those few winners, when actually maybe with open source, they're going to all be like diversified away. There's going to be more companies doing this and making money out of it than perhaps they can see.
Yeah. Yeah. It is, in my opinion, a lot safer, the second option, like for the world in general, right?
For sure.
If we have like 1,000 LLM level companies and they're all competing, it is a lot safer. Yeah. Yeah, it's interesting. It's interesting to see. It's interesting to see. One thing that is unprecedented, which is very interesting to see for me, is that we are able to deploy insane amounts of capital when there is a reason for it. Like whether that reason, like whether the capital is correct or not, but like already that we have that capability is quite interesting. And we can just accelerate a lot of innovation because that is possible, right? And that's also like standing on so many previous steps, right? You need to have a legal system, you need to have a capital markets functioning, you need to have understanding of valuations, of so many things. So that's already pretty interesting, and it's good to see that if somebody has that idea, then capital is not the main constraint anymore, almost, and we we touched upon it once, that maybe I'm just optimistic today, but that's the positive of it, right? So it would be nice if we want to, if really like these large language models require so much capital and we do want to have a competitive field, then we need to figure out how to raise that type of capital for more than one company, because otherwise we create a capital moat for that first company, and which is probably it's what the US is really good at doing as well.
Mm-hmm.
But then there needs to be competition. I do think it's beneficial if we have competition at that level, and thank God that the incentives aligned for Meta to spend however much they spend training those models so far. But it cannot be left to chance, right? We cannot have, China is investing for sure, but Europe is incredibly left behind, and now with regulation even more. So I think it's a bit of a shame.
Yeah, I think so. But just to take the slightly more cynical side of it, that however many billions, I've lost count, however many billions have been invested into OpenAI up to now, is all money that could have gone to other startups doing other things as well. So the question is the investor view of OpenAI at all realistic? And that goes back to the question about like the degree to which they've used like the general AI or AGI hype to get to where they are. Yeah. The degree to which they built a lot of hype early on the premise that like I think people understood OpenAI as like having some edge where it would be very difficult to compete against them, when actually if you have like the open source model from Meta, you can build similar products pretty quickly.
Yeah.
The model is no longer the advantage, and the model is what has cost so much. So like how much of that money now is kind of looking a bit foolish. And it's basically like where all that money could have gone that bothers me slightly.
Yeah. And how much of it is getting still invested because just to save face on the previous money, right?
Absolutely. Absolutely.
So that's another like big question, because like a lot of companies are in too deep, and especially if you see the Apple Intelligence review from CNET that we talked about, and how little real world benefit it has so far. Of course, like but like so far. How much of that money is in AI just to save face, and just because it's a good question, and how much of it is removed from other ideas, and the opportunity costs of investing in, and my partner was coughing for the whole week, and we were thinking like, we have rockets that are able to land, but we still don't know how to fix a cough, right? So it's such a weird thing to think about. And we know like that theory, right? That investment drives innovation. Sometimes it's the other way around, which is probably how it should be. But sometimes it's also investment drives innovation. And if you have like hundreds of billion on AI, like something will happen. Yeah, it's a very good question.
Yeah,
Undecided yet, I think.
for sure. The incentives make it very difficult to like. You can't take what you see at like you can't take it as the truth. Kind of like there's so many incentives that underlie this activity that drive behavior. Like as you said, if you invested in OpenAI 2 rounds ago, you are 100% going to support the narrative that today it deserves to raise more at a higher valuation, and then 2 years' time, even more at a higher valuation, even if you as an investor have kind of given up. Like if
Yeah,
you no longer really believe it, you're still going to be supportive.
yeah. You're stuck
And
in
you
the
can
bets.
see that. You can see that in uh, a good example of this maybe is like the BG2 podcast. Bill Gurley and Brad Gersner. Ultimata Capital, Brad's firm, invested in the most recent round for OpenAI. And immediately there's like a very clear line drawn between the two of them. Bill is the cynic, like me, and Brad is the optimist, like you. But now Brad has this like financial incentive as well. So like, it's a bit more friction, and
Yeah,
he now is kind of like compromised a little bit by that position. Maybe he's right, and it's a great investment. In which case, well done. But like the way
yeah.
it changes incentives is kind of crazy.
That one is a small commitment in a sense, right? Because probably they've done another like 50 investments, or like it's a small part of his identity, right? But if you think
Hmm.
about Microsoft, right? How much of the market share of Microsoft is today contingent on the success of OpenAI, right? Like we are in the double percentage point, right? And double percentage point of the market share of the enterprise value of Microsoft is the fortunes of thousands of people that
Hmm.
work there, their executives and stuff like that, right? So all those people have an incredible incentive, like almost like I had a successful life versus I had a bad life, like almost, right? Hopefully they have other things, but like they really stacked their reputation on these things going well, right? And so if you stacked it with 10 billion and you still have 80 billion in cash in the bank, like what are you going to do, right? Like, you keep the investment up until it's for certain not a winner, and you build a house of cards. Yeah,
Yeah, and then on top, like another layer of craziness on top of that is the fact that Microsoft isn't investing money; it's investing credits, and then potentially those credits can be reflected by Microsoft as revenue. Don't know if they do that, but like in theory, and like that, then like Microsoft is the largest external shareholder and the largest source of not funding necessarily but resources, is influencing the valuation and the fundraising in a way that it just skews everything beyond understanding. Like you can't read what's happening anymore.
well, or like we just have to think harder and make more podcasts,
Sure.
which I think is possible, um but like we get stuck into models that don't work anymore, right? And if we think about investment in compute and like how like it makes sense, and kudos to them to think about a new model, right? And if you think about a new model, you make it up when everybody's stuck in the previous one, and you can again anchor it to the previous one and then make an incredibly outsized return, then all the kudos to you. The Which is also why I think it's pretty interesting what's happening, like with these incredibly large bets. I think it's the first time. Well, maybe there were previous times, right, when the East India Company was like risking half of its fleet to conquer a different territory in the hope to find gold under the mountain or something. That's possibly right. And the East Indian Company was the Netherlands in a sense, like it was like 90% of the stock market and a
Hmm.
lot of the GDP, right? So, but in the end, we're thinking like, I think what a lot of people are missing is like what creates value overall in the world, right? Um, like money is just a measurement. It's just like what we use to exchange services, and it's more convenient than shipping a billion apples to somebody, right? So then what grows the actual value is if you keep resources like constrained, is just productivity and number of people. So again, you can grow the number of people. That has its own implications. You can find new oil deposits, and that adds a little bit. But really, the growth of value in the world is around productivity. What can we do with the inputs? But what gives it value is what humans consider valuable. If all that productivity is done to, make the perfect printer that nobody uses, then you're not really creating value. And that's why I think, we will plateau at some point in terms of like the average human doesn't need, for like we're already seeing it in microchips, right? The average person doesn't need the speed and the capabilities that a phone has today.
Yeah.
Like, which is, in my opinion, is great. Like, we don't have to chase forever, right? If it doesn't make us happier, safer, better fed, whatever your measure of value is for human life, if it doesn't help that, then don't buy it. And if you can, like, an interesting statistic I was looking at is in the 1700, right? You had to work like a day for an hour of candlelight, right? So if you wanted to read, or if you just wanted to interact with your kids, like during the night, right? You had to work like an incredible amount. Maybe it's like an hour to 10 minutes, but like an incredible amount, right? Right now is something along the lines of like you work an hour and you can light up a candle for like 3 years, right? So that's the exact point, right? So as you get into a world where you don't need any more candles, then you can start reducing how much you work. And if you have like a robot that takes care of the house, and if you have a robot that grows your produce, and if you have and everything is done by technology with fairly little materials, and like a few people managing it and engineering the next version, everybody else can, spend like 2 hours a month doing what they consider work, and then spend the rest of their time doing something else, because their basic needs are satisfied, right? And again, the line of basic moves, right? So 200 years ago, you would have never thought about a microwave as a basic need, but now it's fairly basic, right?
It's not reflected in things like house prices or like energy costs, though. Like that's an area where it is maybe arguably hard. Like, I don't want to get into like comparing prices across like generations of people and inflation and everything, but it's arguably harder today to buy a house than it was 50 years ago, 100 years ago.
But it is, because that's a constrained resource, right? So like the population like 100 years ago or so was like half. Like, it's crazy how much the population has changed in the world. And if you look at cities, I believe 15%, 10 or 15% of Madrid moved to Madrid in the last 10 years.
Wow.
So yeah, it's so the urbanization. So then the price in cities is skyrocketed, but in other places is the same or less, especially inflation adjusted. So, but again, that's a constrained resource. So yeah, the only things that are gonna keep increasing in price are constrained resources, right? So land, obviously, materials, and you can see that, right? You can buy a 50-inch TV for the price of a table, which is very weird, right? But because the wood costs as much as all the engineering and plastic and everything that went into the TV is very strange. But yeah, so materials are constrained, land is constrained. But if we, again, with technology, we increase productivity from a piece of land, now we can like fit 1,000 people in a skyscraper compared to a little hut. We need less land for agriculture and things like that. Plus, hopefully, population is getting to a peak. Those things could be better. And then, digital goods are helping a lot of people, and they are very, very cheap to produce. Books and knowledge and movies and things. So yeah, that's the optimistic version, maybe. Again, possible.
There are definitely a lot of resources currently constrained that shouldn't be. Housing is one that is close to home for me, and also and energy is a choice that goes back to AI as well. There's Google and Microsoft both trying to either get deals with or possibly even acquire like nuclear plants in the US to power their operations.
Yeah.
Which is fairly unbelievable. And I think we will only see more and more of that. You know, the
Yeah.
UK is looking at small modular reactors, possibly from Rolls-Royce, putting those all over the country. So perhaps we're moving out of an era of artificial constraint.
Yeah. Or we're diminishing the constraints on other things, and hopefully we're getting also, well, it's not, it's from like Keynes and stuff, like the era of abundance, in a sense, where you can, like, your needs are satisfied and you can pull back in a little. I hope that's the direction we're heading to.
And maybe you have to wrap your head around that and around the potential impact of AI both together. The only way you can start to understand what the next 10 to 20 years are going to look like, because each individually doesn't really give you the whole picture.
No, it doesn't, because AI per se doesn't satisfy any need apart from companionship. But that's hopefully like a small portion, but on its own, right? But it does accelerate everything else. So if it accelerates productivity so much, then we can get to that scenario hopefully a lot sooner. This is assuming that we don't lock all the gains from this productivity gain in one company.
Yeah.
And and that's actually for me a pretty big point. I mean, like OpenAI is losing more and more of its moral qualities, like as the years go by. But like one of the things that they also always mention is this idea of basic income and like capping the profits for shareholders to up to a point, which now they want to remove.
Yeah.
But like in theory, that was all good in this direction.
I
If
think
you
they're
look at-
removing that stuff because they see the end of the line for their dominance. Like it's less clear now, so they're having to be a bit more cutthroat.
Yeah, I don't know. I mean, I can imagine the pressures, outside pressures on principles when you get to that size and importance are
Immense.
incredible. So yeah. So it's easy to do that when you're like three people in a garage and like you're like, yeah, we really believe in our like, So but I hope they continue. The yeah. I wanted to say something else, but I forgot.
Sorry, I knocked you off course there.
No. It's good.
Well, the biggest worry for me is, again, falling slightly on the cynical side. We came out of ZERP, Web3 investment, which has collapsed and basically gone to nothing. All the metaverse stuff disappeared. Going back a little bit before that, creator economy, micromobility, rapid delivery, all these trends produced one, maybe two big winners, but were largely kind of capital destructive. And everything in 2022, first quarter, when Y Combinator wrote this letter to all their startups saying, like, get to default alive, things are going to be terrible. At that point, AI came along and saved everything, scooped everybody up, huge amount of interest again. And my worry is, like, if this ends up being another trend that destroys capital, even if it leaves it important infrastructure, which it will, and I think is great, think about like railway mania and canal mania as bubbles that left important infrastructure, compared to like tulip mania or NFTs, which didn't, or much less, let's say.
Yeah.
But if it ends up like being just net destructive of capital, and like I don't know what the fallout's going to be. Like venture capital is going to be short term destroyed. Nobody will want to invest in it. Like a second huge betrayal to LPs. It's like that's what worries me. Like, where does this leave startups if it kind of collapses?
Interesting. Yeah. And then if you get into like a proper winter of funding and like how much you slow down innovation and just research and it's a good question. It's a real potential issue. Yeah.
Because we felt the chill in 2022, and fortunately it got turned around by this enthusiasm.
Yeah. In that sense, for me, we need to wake up about moats.
Yeah.
And defensibility of competitive advantages. and stop being anchored at what was a competitive advantage 2 years ago, which is not anymore, not at all. Not even capital is like roughly speaking, but um, and we really need to recalibrate on that and really think about investments in that way. If we keep on betting, yeah, it's a good point. It's a good point. If we keep on betting on software as it was 2 years ago, but then now it can be recreated much faster, and then each niche is like 5 times more competitive, or like let's say 5 times less winner takes all returns, then we could have very very sore LPs and a lot less funding in the next decade or so. Yeah.
Yeah, I think one example of that is the drift of some VCs towards hardware in the last couple of years, because they see that hardware, in a sense, software has large margins early on because it's cheap to build, cheap to operate. But then as you scale and grow and fight with competition, which has all those same benefits, your margins get compressed. Competition is much harder. Your sustainable advantage is much more difficult. That's the problem I think we've had in companies produced in the last decade or so. Hardware, on the other
Yeah.
hand, those moats are much more sustainable. The
Yeah.
like marginality is better. They're better long term prospects. I think that's what some VCs are seeing now and are kind of returning to. But that has all the same issues with incentives. Like software companies, much easier to measure the progress of in the short term, much easier to report
Yeah.
in terms of markups and valuation growth and investment performance. But you kind of have to just like put that aside and focus on the long term, which I think the best VCs do.
Yeah, that stuff doesn't matter, right? It's not like, yeah, we can reflect on it, we can figure it out, but like what matters is like, are you delivering something that makes people's lives better, or are you investing in no technical innovation and just like hoping that the marketing will somehow make this a winner take all company in a niche that can even be a big niche. Um, because that's also how it feels like when during the dot com boom and stuff, right? Like the innovation focusing on product research and things like that was happening before, and then like people thought, okay, we understand the model is just an internet service, we just need to make sure that it wins, right? And then the innovation goes down, and the spend in like, well, marketing or anyways like trying to make that story work
Mm-hmm.
becomes a lot more important, and then there is no benefit for the final customer, and those gains are not there. So it's a good it's a good
I
point.
wish the lesson that Y Combinator took from this, maybe instead of having a cohort just stacked with generative AI companies, was maybe to update their tagline from make something people want to make something humanity needs would be better.
Yeah, make something physical. But
So,
I do believe, right, like the inertia that they have in software could be an issue for the
mm-hmm.
next 10 years, right? Because you build a brand, right? And you build skills and you build an ecosystem. You have standard terms, you have safes, right? Like you are so committed to the software side as Y Combinator that this, if there really is a shift in this direction, it could even be a chance for another player to become the Y Combinator of hardware, or different types of modes. I'm still unsure, like for example on biotech and pharma and things like that. I don't think Y Combinator has the same leadership that it has in software. There isn't an equivalent. At least I'm not aware of an equivalent. But there are different, and they picked the largest wave so far, so that's for sure. But yeah, I'm curious to see where that goes as well.
For sure, I think you're absolutely right about their inertia problem, and probably that's where that inertia is most concentrated. But also, it's absolutely everywhere because virtually every bit of advice, every bit of startup wisdom is through the lens of software. And, SaaS type growth and SaaS type multiples or SaaS type acquisition metrics. And
Yeah,
I just imagine, like, I never really thought about it like this before, but like, if you're a hardware founder out there, what does all the content online about startups look like to you? Mostly irrelevant, if not misleading. must be kind of frustrating.
Yeah, well, we got a call yesterday from a friend of mine. They're working on a electric airplane, and I was like, yeah, like you can do projections 3 to 5 years on the platform and do the valuation. He's like, yeah, we don't really forecast any revenue for the next 8 years. Like, okay, that might be a non-trivial valuation to perform, right?
Yeah,
But
but not a bad one
no,
potentially.
not
Like,
exactly.
yeah,
Yeah. And the thinking needs to happen, and this at this sort of first principle level. Like one thing that I'm glad is happening more and more is venture debt for SaaS, right? Because that's what you need. Like if you have subscribers, if you have regular revenue, and if you're growing, 20-30% per year, you can do venture debt, like, and if the industry is extremely competitive, think about like booking websites for X, right? Like booking some service or something like that. There are like a ton of those services. Like you can work with loans on those. You don't have to follow this sort of unicorn paradigm, and because again, the competitive advantage there is there. Like you have locked in customers and things, but it's not the Facebook competitive advantage. Is not the winner take all over the world type of advantage. So, and that's fine. Like there is a lot of value to be created by those companies with the right structures on capital. That is one of the resources they need. Yeah, we need to recalibrate the whole thinking. Get out of the idea that software is the only thing that happens and the only thing that has returns. Because there are doubts that it's gonna be actually.
yeah, for sure. I think so. Next 3 or 4 years are going to be very messy, I think.
Yeah, 100%, 100%. And the extremely positive view, which I think we should adopt, because why not, right? Is we can accelerate so much like different things thanks to what we found out in terms of basic research on transformers and LLMs. Of course, language is one thing, but like the same idea can be in images, in data, in they're doing it in molecular research and biology. So like that can accelerate so much that everything is on the table, right? And I was speaking with another friend of mine. He was like, like, that he was missing the cowboy years of SaaS, where when everything was an opportunity and people were daring things and stuff. Like this change is different, but I think it's like of very comparable magnitude. It could be smaller, it could be bigger, but we are there. Mobile brought a big change. This has the opportunity to be the same if we, especially in my opinion, especially in the direction of the tractor for the knowledge worker. Just what that can do is transformative to almost any industry, because 80-90% of employment now is knowledge workers. So
But I think we have, or at least, you use the optimist. Maybe you're sold on that idea. I think I still need to see it proved a little bit more. Can the models get a bit more competent? Can they become more specialized without losing too much capability? I think there's a little bit more to be proved there.
shall see. Nice. I think that's a good place to leave this. Thank you for listening, if you have gotten to this point, and talk to you next time.
Well done if you did.